welcome back. You're watching Stock Picks, and today we unpack Coronation Fund Managers, famous brands and growth point, and that's with independent analyst Jimmy Moyaha. Jimmy, happy New Year. Thank you for coming in.
Happy New Year, Nolitana. Thanks for having me. It's nice to be back.
Yeah, well, I think it's our second Stock Picks for the year, but the first one we'll be looking at mega caps. Very keen to get into this for you. But before we get into 2024, 2023, Jimmy, was that a year for equities?
It depends on which equities you were looking at. 2023 was quite an interesting year. I think there was a lot to contend with at a macro level. And I mean, you can almost trace these things back a couple of years, right? So we've had these conversations on the show before to say 2021 coming out of that pandemic, coming out of 2022 or start of 22, Russia war, start of 2023, another war. So it's just been a myriad of things that have been, keeping the markets under pressure, on their toes, so to speak. But was it a year for equities? I think for some equities it was. There were some equities that did more than 50% in gains. There were some equities that lost 80% in a year. So it was a very volatile year, and I think we saw some of the worst macro factors that could potentially affect things from a volatility perspective, with interest rates and inflation and all of those factors. We got through the darkest part of those storms, and I think 2024 is going to be a good year. I'm optimistic that this is going to be a better year than last year.
Well, I'm actually happy that you're optimistic, Jimmy, because it's been very difficult to kind of pin, where we'll be in 2024. Before we head into it, I just want to compare US stocks to South African stocks here. Of course, we know South Africa, SA Inc. Had a complete beating in 2023. But the US is a bit of a more colorful picture.
Yeah, so surprisingly enough, your S&P and your NASDAQ and even your Dow Jones, they all outperformed. I don't think that's too surprising that they would outperform the JSE. We have seen in the past that in times of uncertainty, emerging markets do typically sell off more so. And with US interest rates where they are, the US dollar just has been on this attractive curve for the longest time. And yeah, the Magnificent Seven did quite well last year, considering what everyone's had to contend with. But again, you have to then take it back to 2021, 2022, 2020 as well, where they weren't the best performing stocks in some of those years as well. So it was nice to see in 2023 that we did see signs of market recovery and a bit more optimism within the market. I think market participants, investors, both retail and institutional, have been looking for returns and looking for attractive returns following everything that we've gone through. And when you get companies that report positive earnings that are still able to weather these difficult storms, it then starts to present as an attractive picture. And I think that's going to be something that investors are going to be looking out for in 2024 as well, is to say there's a lot of uncertainty. Even though I remain optimistic about the year, there's still so much uncertainty that persists in the market. And if you have to compare the performance, I think we're now going to see quite a strong performance from something like the JSE Top 40 in comparison to other markets, because it has been under pressure. It has been on the receiving end of a lot of bearish price movement. And we saw that November was a good month for the JSE, but this is obviously it was the recovery month after having eroded everything that we saw up to March. So January to March, great last year. Then from April down to October was not the best. November sort of showed signs of recovery, and I'm hoping that momentum goes into 2024, because I think there's a couple of good value stocks that can be found, both locally and internationally. But this is kind of why with the stock picks this time around, you don't want to go in too heavy. You don't want to go in with too much risk, given the amount of things that still hang in the air.
All right, so let's get into the stocks for today. I want to start with Coronation Fund Managers. Of course, this is one of, I think, the best fund managers that we have in South Africa. What they have hanging over their head is the tax issue. But I'm wondering if that's been priced in at this point, and just something that, investors know might have to be paid out at some point and have moved on from.
I think it is. I think if you look at the last set of numbers, I think it was interim earnings numbers that they put out late last year, that we saw a significant drop in earnings per share, and that was them saying, this is the tax bill we're contending with, this is the provision that we sort of see around there, and this is how it's had a negative impact on earnings. So quite a significant impact on earnings. I think earnings almost halving there for the last period, for that interim period they reported on. So I think at this point, this is why I'm liking Coronation, because the stock itself is not a bad stock. The dividend yield you're going to get from a Coronation kind of asset manager is not a negative point to be in. But also, more importantly, if we are looking at a year of positive growth and we're looking at a year of good movements and good returns, guys like Coronation are well poised to make those investments, right? To start benefiting from those long-term investments and start turning around so something like the tax conversation, or the tax scenario that they find themselves in is, once they've paid the bill, then they've paid the bill. It's not a lingering thing that'll hang over their heads. It's not that they need to change management, and it's not a fundamental issue. It's a numbers issue. If they pay that amount, if they pay less, yay. If they end up paying more, then they have more money to recover. But at the end of the day, if they're still, they've got healthy assets under management, they're still doing well. Coronation, the likes of 91 as well, asset managers are poised to do a lot better than they have been in recent times. And what I particularly like about Coronation is at 29 Rand, I'm not seeing much further downside. So the thought process and the rationale behind all of the stock picks for today is there's a lot of uncertainty, right? So we don't know when interest rates are going to be cut. We don't know how much longer inflation is going to be sticky. We don't know when the tensions in the Middle East and around the world are going to end. Most importantly, we don't know how elections are going to go, with more than 50% of the world's GDP voting this year. Major economies, India, China, Russia, South Africa, effectively most of the BRICS bloc, America, the UK, Europe. There are so many elections happening, and with that uncertainty, we don't know what that's going to do to the market. I think this is the first time in history, or at least since I've been in the markets as well, where you have so many elections all concurrent in the same year that could have ramifications on markets. So I think if we are looking at that, that brings a new level of uncertainty. And yes, markets have dealt with uncertainty for the last 3 or 4 years. And so that's why they're stronger, they're more resilient, they understand where they're going. And guys like Coronation that have been able to weather the COVID storms, the inflation storms, and all of those, when an election year like this comes around, I think you're also going to get some really good, safer choices being made by them as an asset manager. And so 29 Rand looks very attractive as a price.
Just before we move away from Coronation, I think for me, what I really like about the company at this point is just conviction. They, for instance, decided to exit platinum. It's the kind of decisiveness of that, rather, that I think many market participants might welcome at this point. And I'm wondering if the management team at Coronation is also, what makes them a formidable pick at this point.
Absolutely. So if you look at I think there's a lot of really good stocks out there, and it is, I found it very difficult to pick just 3 to come and discuss, because we can go on about everything across sectors, across industries, and all of that. So again, when I looked at the picks, and the reason these picks were chosen was looking at the uncertainty. You want to have a bit of diversification across sectors. So you'll see Famous Brands is in retail, you'll see Coronation is in asset management, and Growth Point is in property, right? If you're looking at alternatives, there are other alternatives within each sector, but I also took into account how much further downside could persist, right? So there are other guys in the capital space that I am liking. I mean, I've got my eye very keenly on African Rainbow Capital, especially after the conversation I had with Kunrad Jonker yesterday about them breaking even, so the Time Bank business breaking even. So for me, there's a lot of value in a lot of different stocks, but you have to now think about more than just, is the stock affordable? Is it discounted enough at this stage? Like you said, the management team that sits within Coronation is a strong team.
Let's move on and talk about Famous Brands. I was keen on it. I'm always keen on a burger. I'm wondering if this is something that is actually just reality. Even at certain times, people love a pizza, people love a burger, and it's actually possibly the kind of nicety people can actually afford in uncertain times.
We all have to eat at some point, right? So it's kind of like, if you think about retailers like ShopRite, like Pick n Pay, whether inflation gets to 10%, whether it gets to 3%, we're still going to be buying the necessities. And what I've seen in the times that we've gone through is the more load shedding persists, the more people start to eat out and look at that. And I mean, if I look at a company like Famous Brands, again, there are other guys in the space that you can go with. You can go with a Spur Group that also has a diversified portfolio that would also give you a bit of an attractive kind of investment. But I think at this point, I'm liking the fact that at 57 Rand, Famous Brands is, again, the downside that I'm looking at versus from 57 Rand to potentially 70 or 80 Rand, it might not happen in a year, it might not happen in two, but you're getting in at really good prices for a business that has such a large footprint nationally, right? And I think about, again, in the retail space, I mean, if we move away from consumables or consumer foods like this and we look at something like Pick n Pay, I've been talking about Pick n Pay since last year as well, at 20 Rand. Everybody thinks 20 Rand, this doesn't make sense. How can you go into a company like that? But again, the footprint of Pick n Pay, the management team of Pick n Pay, they've just announced a new head of retail. So companies are attractive. They are really attractive valuations to be looking at. And something like Famous Brands where you are at a decent price, right? I think 57 Rand for it is a fairly good price. It could potentially come down. Yes, there's always potential for stocks to come down, but I again if I look at the price movement over last year and the year before, I don't think I've seen too much downside from 57, maybe down to 50 Rand, maybe even 45 Rand, but it's difficult to see the stock pushing that much lower, given that we're expecting economic conditions to turn for the better, right? So there's, again, alongside things like risk that you have to look at the balance sheets of companies, right? You have to look at whether or not companies have those higher debt levels. Can they weather more storms? Are they... I mean, if you think about a company like Spur, which, again, commendable for where the Spur Group is now. In the pandemic, there was a time where we were thinking this was the end of the Spur Group, where they were considering shutting down Spurs because there was simply not enough people. Now, they're a business that's acquired other businesses and is expanding. So you start to see that within that retail space, consumers, especially South Africans, we do love a good burger.
Well, I'm one of them, Jimmy, so I completely welcome. Let's talk about property now with a growth point. Growth point is a very interesting one. Property in South Africa really at the mercy of the economic environment. I'm keen to find out about growth point specifically with their portfolio also being largely based in Gauteng, which has its own issues.
I think growth points, my main concern with growth point, if I'm going to be honest, is that office portfolio. But that office portfolio is a concern for every real estate investment trust. It's a concern for every property company because office vacancies since the pandemic have not recovered to pre-pandemic levels in most cases, right? But Growth Point has a healthy spread. Yes, they have a lot of properties condensed within the Gauteng and the Sandton region and all of that. But if you look at the fact that they do have industrial properties as well, they do go beyond just an office portfolio. And at 11 Rand, they've bounced off of a key level around 9-10 Rand or so, where I think last year when I spoke about them, I said we could very well come down to that level, and we did, and we bounced off there and we held there quite nicely. I think for Growth Point, if we start to see a reduction in vacancies, well, their vacancy levels aren't high. They're not excessively to the point where a company like them would be concerned. I think they're leveraging off of their footprint, their history, their presence within the market, and it becomes easier for companies to then say, we've got all of this real estate, we've got all of these assets, how do we convert them? How do we make them more attractive? Do we convert them to lifestyle properties, mixed use properties? Do we throw in apartments and increase our residential portfolio on the exact same existing setup of what we already had? I mean, we've already got those properties under our belt, right? So I like the fact that Growth Point might have that to go for them. And again, with the picks, it was diversification, right? Some people want exposure to property, to real estate. You want to be looking at how to get into real estate at what levels. So from a real estate perspective, I think it's a good play. It's a good long-term play. And again, there's still going to be a lot of uncertainty that persists in the market. So if you get in at 11 Rand and the share price comes down to 10 Rand, I wouldn't panic. I mean, if you're panicking over 1 Rand, you probably shouldn't be buying the share, you know? So we're looking at 2024, and I think 2024 and possibly even 2025 might be sort of a good rebuild kind of time, right? Where you see a lot of good positioning for another bull run, another bull cycle. We've gone through quite a bit of bearishness, right? And markets are starting to say, okay, we've corrected, okay, we've seen negativity, and now it's time for a bit of growth and a bit of positivity. And if Growth Point does, I mean, we know that they've been looking at expanding beyond the Gauteng sort of province in terms of property portfolios, and I think at 11 Rand, it's worth a try.
I must ask you about property as a whole, Jimmy, and what came to mind was Accelerate at this point. Accelerate is the owner of Four Ways Mall, which is actually battling with a very high vacancies. And I'm wondering, from a supply perspective, do we have an oversupply of retail space in South Africa, or considering where the economy is at this point, similar to the office? So of course, we know retail has recovered from COVID-19, but do we just have too many shopping centers, too many shopping malls? At this point, is it possible to have too many?
That's a good question, and I think it might very well be, because if you think about the geographical spread of shopping malls and all of that, right? So let's take the N1 from Sandton to Pretoria, right? Sandton City, Four Ways we can include in that sort of direction. Mall of Africa, there's probably something before we get to Centurion Mall, then we get to Centurion Mall, then there's Menlyn, then there's Brooklyn. So there is a serious sort of concentration of these malls and these shopping centers, but also those are sort of your bigger malls. They're still smaller strip malls. Those smaller type facilities where the anchor tenant is a Pick and Pay or a Dis-Chem or a Woolies Food or whatever, and you've got a couple of other little shops, convenience stores. It's not a mall, but it's a little center where you kind of get your bread and milk on a daily basis. So we certainly have an abundance of retail space. Whether or not that is a good thing or a bad thing, I think for property developers, you're starting to see that they might want to look at that a little differently and say, we want to put down properties where it makes sense. And you're kind of seeing that with guys like Baldwin, right? Baldwin has all of those apartments, and where there are those strong concentrations of apartment blocks or apartment complexes, there's always a mall nearby, right? There's always a convenience kind of element to it. So I think for as long as we continue to see the growth on the residential side, you'll continue to see access to more convenience and all of that. I think what becomes important for malls is a price point issue, right? How much is your rent per square meter at Four Ways? How much is your rent per square meter at Sandton City? Which one serves my customer base better for the products that I have? Your bigger guys like your Foschini groups, your Pick and Pays, they're already in those spaces. They're already in those malls. So your vacancies are going to likely be filled by some of the smaller guys that might want to be expanding their footprint. And they're going to be very price sensitive. They're not going to want to rush to take on overheads in a market where they're still trying to pick up customers. They're still trying to grow organically. So you could see this push and pull within the retail space, offering attractive rentals versus longer term leases in an effort to keep customers and all of that. And I think when you look at property as a whole, if you're looking at a property stock, think about, is the stock concentrated in the office space, in the retail space, in the industrial space? Do they have more to offer? Think about someone like Amazon coming into South Africa with that distribution center. They might want to take the Take-A-Lot approach and set up distribution centers throughout the country to make it easier to warehouse and store things and all of that. That's not retail kind of property. That's more industrial kind of property. So there are different components within the property space. And I think we're also starting to see that with interest rates potentially coming down, the property market is starting to look a bit more attractive. But then what do you do with the property? That becomes the important question. As a developer, as a landlord, how do you make it appealing to your customer base or to attract tenants to say, there's property for you, come and use it? So I think if you start to look at those mixed use kind of setups, we might see more of those come up in future.
Before we move on, and I think before we even wrap, I must also ask you, you mentioned the issue of, converting office space into something innovative. Something needs to happen. I mean, I think I used to live across the road from a Growth Point building that was literally vacant from the moment we moved in to 2 years later when we moved out, just vacant the whole time, and it made us just wonder, what could you do with it? And that's a big one, I think, Jimmy, because of course we've spoken about retail, which of course is a little bit, saturated at this point. Industrial has to be a very specific kind of space to build a warehouse. Are we looking at a residential, a boom there? Are you people living in old office buildings, which is possible?
We do have a housing shortage. I think what definitely comes to mind if you think about that is, again, price point, right? If you're going to develop something, do you have the capital to develop it? Because if you're a developer borrowing from the bank, what rate are you borrowing at versus how long it's going to take for you to recoup those funds, right? So those are always considerations, but there's never a bad time for infrastructure. Infrastructure is always a good thing, and we've seen a huge infrastructure drive from government, from private sector, from private equity. Infrastructure development is never going to be a bad thing for the country, right? So if we have the properties and we are able to convert them, and something you mentioned around the property that you used to live across from, I can think of a property very distinctly in Sandton City that is the most attractive property in my mind right now, just purely because of its location, and it's been vacant for so long. Sure. And I think if you look at, there are those unique spaces where you say, hang on, that could be a darling or a diamond in the rough. Can we get in there? Can we make sense of it? And not every property is going to be like that. But what we know about property investors is they're not in it for 12 months. They're never, it's not a short-term view, whether you're a retail or a private property investor or someone that's buying an investment property. If you think about an investment property, if you stay in an apartment or you stay in a house and you buy an apartment to rent out, you're not renting it out with the hope of five months from now selling the property, 100%. It's capital appreciation and growth at a long-term scale. So if we start to see the shift and this alternative use for these properties, you could see on a long-term basis, that could be a very good thing.
Well, we'll be watching that one very closely, Jimmy. Great to start the year off with you. Thank you so much for your time. That was independent analyst Jimmy Moyaha with your Wednesday edition of Stock Picks.